Good afternoon, everyone. This is Micah the Prophet Akinzua, and I am your host for Ignite Your Income with Micah the Prophet, and that is Profit Profit. And basically, that's a play on words because a prophet, Prophet, is a messenger. And I'm a legally trained accountant that has a financial message for anybody that thinks they need it. But what I really specialize in is making very high level information. I specialize in making those difficult financial things um, accessible to the average Jane and Joe in a way that's not intimidating and in a way that makes you actually want to listen to what is going on. Okay, so what we're going to be talking about today are a few topics. Basically, I want to talk about the surprises that we had in 2023, what that tax year brought us. I also want to talk about just a few popular updates in 2024. Um, how to hold your accountant accountable. What are some things you need to kind of look out for in your personal finances, even in your business finances? And this long awaited, you know what? Let me stop playing. I can't even say long awaited because I honestly didn't know about this. But the beneficial ownership report, I had to get smart on that. That just rolled out January 1st of this year, and it's got people sort of up in arms because of the threat of penalties and jail time and all that good stuff. So let us get right into our talk this afternoon. All right. So the first thing that I want to talk about are the surprises, at least what surprised me. I'm sure it may have surprised many of you in the public, but the biggest surprise that I saw hit from 2023 were all of the penalties. Did y'all get the penalty letter? Well, let me say this. If you did not file on time, if you didn't file on time, or let me say it this way, if you filed for an extension, because I know as soon as I said that, the ones that filed an extension, I heard you. You yelled, I did file on time. I heard you. I did file on time. So that's why I'm going to change it because I had to do some research. Like so many people were getting fined that it caused me to have to go in and say, what is going on? Because people are demonstrating that they actually did file for an extension. So it doesn't seem fair that you would then charge me. Well, let me tell you what happened. This has always been, okay? The IRS, they are just deciding now to enforce laws that have been on the books. And I'll tell you my theory on that in a second. But basically, when you file an extension, that extension is an extension of time to file, not an extension of time to pay. And that's where they get you. So, whereas the return is indeed in compliance, all that means is you won't have any compliance related penalties. However, your taxes are technically due to be paid by the close of the year, December 31st. So they give you, if you're doing the quarterly thing as a business, even individuals, because again, our tax system is a pay as you go system. These are things that are always and have always been on the books, but if they're not constantly or consistently enforced, the public doesn't know that it exists. They don't know it's a thing until you start slapping them with it. So that's the first thing. Let's do a quick recap. So the first thing that we have to understand is that the tax system is a pay as you go system. That means the government does not want to wait until after a particular reporting period for them to get paid. So if you are a W 2 employee, then what's going to happen is your employer is going to do the withholdings for you. If you are a business owner, then you are responsible to do a quarterly tax return and do an estimated return and figure out, hey, based on this level of revenue, this is how much I need to pay in taxes, how much I need to remit. And if you overdo it, that just means that you're going to get a refund at the end of the year. And I mean, like, come on, that makes no sense. Like, you're writing checks just to get a refund. So we want to do the best estimate that we possibly can so that we're not just storing up money in Uncle Sam's storehouse. When that's not paid, so okay, let's say December 31st comes around and you have not squared up with IRS. And I heard somebody just yell out, how do I know I'm going to square up? It's an estimate. Like, you know what your total number is going to be for the year. That's when you get with your accountant and say, hey, look, I made $90,000 in my business. I know I ain't made no estimated payments. How much I need to send by December 31st? Then I'm going to say to you, well, actually, we have until January 15th in order to bypass any additional interest. So there won't be any compliance penalties. However, because and penalty, that's where they get you. They're not going to penalize you. But what they are going to say is, we still wanted the money by January 15th if your business closed December 31st. And if we don't get it by January 15th, America is so complicated. If we don't get it by January 15th, okay, we'll give you one final time, business owner, to include it in your annual tax return, which for businesses is March 15th. That's where all hell breaks loose. Because as small businesses, what we tend to do is we start running out of time and we say, oh, I'm not going to make March 15th. So you call your accountant and you say, file for me an extension. And you think that filing and you do this in February. Like, your chest is all out, you popping collars. Because in February, you realize that you were not going to meet the March 15th deadline. But what Uncle Sam is doing is, and we have to remember who we're dealing with. We're dealing with the IRS. And that R stands for revenue to him, Uncle Sam. That does not stand for refund. And business owners know who I'm talking about. They know what I'm saying when I say that. You got to understand that this is the fundraising arm for the government. And their mission is to raise revenue. If that's their mission, they're going to always look at the rules in their favor. So we have to always keep that in mind. So if they're going to tell you that they're going to give you all this extra candy, i.e., time to extend, you should always ask yourself, what's in it for you? Because I know you setting this up for me to get the short end of the stick. What's up? What's going on? And that's when you call an accountant like me. Because I am definitely going to give you the layman's version of all of this esoteric language they throw at you. And we're gonna get into some stuff in just a minute. So that's what happened. You didn't pay it on time, even though you're in compliance. That just means that whatever that penalty is, that penalty. The last time I saw that was like $4,000. Failure to file, and then like accuracy related penalties on that. That just means they can't assess any of that. But they are definitely going to say, oh, we estimated your return. No, actually, let me back up a second. They're not going to say we estimated your return. They won't start estimating returns until you're like grossly negligent, until you're like one complete tax year. Then they'll do a return on your behalf and slap you with all the fees. But when you file your return timely, within compliance, so March 15th, you have until September 15th. So you file it within your extension time frame. They're going to say, okay, thank you, but we are due interest on this. That made me mad on behalf of everybody who had to pay that. So listen, y'all, let me tell you what the deadlines are going to be for 2024 so that we don't find ourselves in this. Because what I believe is that all of this money, Uncle Sam, his wife, Auntie Iris, she done retched into that bra and then gave Ukraine money and all of these different places, all of this money. And now they want to, they got to re-up. They got to make sure that the coffers are filled again. And they don't ask nobody nothing. They just go ahead and spend their money, don't ask nobody nothing. I think it's very noble that America is looked upon to help out like that. But just like I tell individuals, you got to make sure you got at least 6 months of your living expenses saved up. That's how you know. You got to keep things in balance. Too much on any side of the scale is abuse. You can't be so benevolent that you're not taking care of home. And you can't be so focused on home that you can't look out for your neighbor. Where is the balance? So that's one of the reasons why I do what I do, why I study the code so much, because I heard a very famous billionaire say, I don't like how the government spends my money. Like that sent chills through my body. I don't either. And that's why I do as much as I legally can to keep my tax bill low. You'll often hear me say, you never have to cheat on your taxes. The crooks that write the rules, they make all of the good stuff legal. And as long as you keep honor amongst thieves, they leave you alone. All right. So you just got to pay to play. That's all. Start setting up entities, start setting up corporations, all of this kind of stuff, and make sure that we're properly sheltering your income. So in 2024, these are the deadlines, and none of these deadlines fall on a weekend. I know sometimes we we look forward to that because if it falls on the weekend, that means we have until the following Monday. Okay, none of that exists this year. All of these are during weekdays. Businesses, if you are a partnership, an LLC, treat it like an S corporation, an LLC, treat it like a C. Your tax return is due March 15th, and that's a Friday. Individuals and trusts, your tax return is due April 15th. That's a Monday. And then if you have a nonprofit, a foundation, your tax return is due May 15th, and that is a Wednesday. Um, Two major or two popular changes that I want to talk about for 2024 would be the mileage deduction for small businesses. And I hate using that word, small business. So let me define that so we can just get that out of the way. All right, the definition of small business, all that means is your business earns below 750,000 annually, or it earns between 750,000 to 35 million. All right, that's what most insurance companies would say. I know that the US Census, they say between 750 and 40 million, 40 million plus. So that's a pretty nice size. So I don't want you to think when it says small business, don't let that, attach itself to you negatively. Also, it can be measured on the number of employees you have. If you've got no more than 1,500 employees, that also could be an indication that you're a small business. All right. So when it comes to small businesses and you're deducting your mileage, you can take 65 and a half cents per mile in 2023. Okay. If I said 2024, I meant while we're in 2024, what we're looking back on in 2023. It gets confusing because we're in a year looking back a year to do that return. So this is for the 2023 tax year that we're filing while we're in 2024. And so that mileage rate is 65.5 for small businesses. Now, look, did you realize that you can have a mileage deduction for uh, trips that you do for charitable purposes? You can write that off. You can write off the mileage when you go to anything medical, when you go to your doctor's offices. You can write that off. So those rates haven't moved much. And I suspect they haven't moved much because people don't know that you can do that. Because this is certain, like this hasn't moved in a while. This is something that we should really be talking to our representatives about, to say, hey, look, don't I get any more than that? Um, Play with me. I'll put the times I go to church. Because if you put anything in that basket on Sunday, Sunday mornings, I'm writing off. Get out my face. Medical, definitely. When you're going to the doctor's office, when you're going to go look at glasses, you're going to go pick up glasses. When I go pick up my prescription, I'm writing off my medical miles. Don't leave anything on the table, folks, because that's where the details are. We have to really be so intentional about all of these different little areas of financial management, because if we don't start plugging up holes, number one, we have to know where holes exist so we can plug them up. Once you start plugging up these holes, you realize you got a little bit more than you thought. All right. So what else we have here? So, I want to talk about some announcements that the IRS has made. Let me see. So the ERC, the Employee Retention Credit, so much fraud has happened with that. If you have a small business, I'm sure you have gotten emails, text messages, maybe even a little robocalls, and then it shows up where you least expect it. People just coming out of the woodwork wanting to do this ERC filing for you. Well, the IRS, number one, has slowed down on how many of these applications they're actually paying out. So they sent that notice out saying, nope, wait, y'all, we're gonna take a closer look at this. But it's so much fraud out here as it relates to that, that they're announcing a voluntary disclosure program for paying back this money. So, things didn't go too well for people with the PPP. A lot of fraud was detected on that. So they said, hey, you have until March 22nd, 2024 to voluntarily disclose that you lied. And of course, they're going to want to check. So I think that's preferable to jail time. So if you know anybody who might find themselves having a conscience after they got a fat ERC check, tell them they got until the end of March, well, not even the end of March, they got until March 22nd to make things right with Uncle Sam. Okay? So remember I told you they were disallowing. So they've disallowed over 20,000 applications. So that's a lot of nerve. And you wonder why they penalizing people for not paying their taxes. You wonder why they're invoking all these new laws. Not even new laws, I'm sorry. Why they're invoking existing laws that have lying dormant for a while. hmm So, do y'all remember hearing all of the controversy around Cash App and Venmo and PayPal possibly reporting on money beyond $600 that we might be exchanging, period, that you might be exchanging, period. But the public is crying out and saying, hey, look, what if that's me and my sister exchanging money back and forth? I think that's too intrusive, big government getting all in our face about this. So this is what they did. They said, okay, we're not going to make it a thing for the 2023 tax year, but it will be a thing for sure at some time in the future. And what they've decided to do, they have thresholds on it. Okay, I think it's something like 200 transactions. So basically, y'all, we're under a lot of scrutiny. A lot of scrutiny is coming as it relates to our personal finances, and we need to pause and ask ourselves, what's more important? Should we start writing emails to our representatives Should we start sending text messages? The only reason why they're doing this is because we, by and large, as a people, are quiet. We're quiet. I've seen where legislation, proposed legislation, has been stopped in its tracks when people stand up and they say, "No, we ain't doing this." So you can count on me during some of these episodes to let you know when certain things need to be pushed, and really just when certain things need to come to your awareness, and you make a decision as to whether or not you want to push it or not. But I really just want us to have information so that we're making an informed decision. I don't want to see no tears when we filing taxes because believe it or not, our voices do matter. I've seen that firsthand. In fact, I see firsthand how a lot of these policies really impact the average Jane and Joe on an up close personal level. So the representatives definitely work for us, and we need to make sure that we come together as a people to present what we like and what we don't like. So they've increased the threshold monetarily to 20,000. So that's to cut out all of that stuff of, oh, it was my brother. He sent it to me and it was too much, so I sent it back and then we made a mistake. And they saying, nope, you got 200 times to do that and you got up to $20,000 to do that. Don't play with me. So the government is not playing that game at all. Okay? The next thing I want to talk about is holding your accountant accountable. There are a lot of things that we don't know as the public because we tend to rely so heavily on experts that we don't question them enough. Okay, so there's a book that I published in 2017 called I Want You to Finance Your Life. 7 wealth secrets you need to know about the tax code. Now, so that's obsolete now, right? A lot of it is. Or actually, you can probably still use it, but yeah, we got so much that's going on that I figured these podcasts give me an opportunity to talk real time as things are rolling out. And the reason for that book primarily was so that people would have some type of guidance on how I can hold my accountant accountable. I wish I can be America's accountant and just take on America. I can't. This is not just about my practice. This is about us as a nation increasing our financial literacy, increasing our buying power, making sure that we stay America. That means something. Talk about that later. But that's really what I care about right now. And I see people go into these different offices. I see them come to me. I see them call me when I do webinars. They're asking certain questions. And I'm like, who is steering the public in the wrong direction? So there are just certain things that you just need to know. So this podcast is one opportunity where you can kind of hear some nuggets. And I encourage you to seek other voices out, get a different perspective, get a different feel. Basically, seek to understand what I need to know. Let me expose myself to so much about small business ownership, about personal budgeting, personal finance, family finance, asset protection. Let me just expose myself to it. Let me just be around it. And then when you're sitting there getting your taxes done, when you're sitting there getting whatever service you're getting from your accountant, if your accountant is mute, if all you get at the end of your tax appointment is a completed tax return, that should be a red flag. That person needs to be talking to you about red flag areas that you should look out for. Now, they should not be doing that additional work for free. I do think that the labor is worthy of his or her hire, but they should at least be giving you pointers, letting you know what direction you should be going in, and give you a roadmap and a quote to getting that done. But don't just be quiet. I've learned in 18 years of doing this, just because people holler and say ouch don't mean they don't have it. That just means they know the value of a dollar. They know the value of a dollar and it makes them holler. All right, that's just all that means. But yeah, it doesn't mean I'm not going to give you information. But here's the thing: when you're holding your accountant accountable, realize that that first accountant is typically you. So how do you hold yourself accountable? Let me give you a rule of thumb for holding yourself accountable. Brian Tracy, who is a motivational speaker, he's been in the game for a while. You probably have heard that name. But he has a blog out, and the name of that blog is The Millionaire Mindset. And in this blog, he says that the average self made millionaire spends between 20 and 30 hours per month either thinking about, studying, or planning his or her finances. 20 to 30 hours. So this time right here, this counts. What I'm asking you to do, I'm not asking you to do 20 hours. I'm asking you to do at least 2 hours per month looking at your bank statement, reconciling your bank statement. Just sit there and reconcile your bank statement. Sit there and balance your checkbook. If you have a small business and you're not at a place now where you want to spend money on QuickBooks because money is needed elsewhere, I think your bank statement needs to be your profit and loss statement. But the caveat there is make sure you are exclusively using that bank account so that you're not spitting and taping stuff together. Well, I needed to buy some accessories for my computer and I didn't have enough money in that account. Don't buy it until you fund that account. Put the money in there. That's the trade off for you not hiring a bookkeeper yet. You got to put a little bit extra effort into it. That's the trade off for you not having QuickBooks yet. No excuses, no pity parties. You're in business. So it's gonna be work. That's the work. So with 2 hours a month, you can get that done. You can sit there and export all of the activity in that month's bank statement to Excel and have a nice little beautiful profit and loss statement. And then what you're gonna do is you're gonna bring all that together. It's gonna be 12 of them if you only have one bank account. It's going to be 12 of those. You're going to collapse that into one profit and loss, and boom, you hand that over to your accountant. It gets real simple. But if nobody pauses and stops and gives you this science, you'll continue thinking that this is an overwhelming thing. No. I mean, when you know that your books are in order, when you know how much money you spent on toner last month, when you know that there's a subscription that you called in and canceled and it's still showing up, did you realize that you only have 30 days with a lot of major banks to contest a charge? Now, Bank of America, I think they allow you to go up to like 90 days because one day I do that. And I think that they did 90 days. But Chase, you will not play that with Chase Manhattan. Chase Manhattan. Chase. They will tell you, oh, I'm sorry. Do you reconcile? I had the banker, she asked me that, did I reconcile? And if I could have unscrewed her head, I would have done so. Of course, I'm kidding. But yeah, they get real crass about that and real high and mighty. So do not be caught with that work undone. Make sure you're reconciling every 30 days. That's a part of that 2 hour commitment. If you're not spending 2 hours, then or if you're not reconciling, I done forgot my train of thought. But basically, make sure that you're touching your bank statement. Make sure you're looking at it every month. And you got until the 15th of the following month. So right now we're in January. So we're at the end of January. So by now, December's reconciliation should be complete. We should have a good confidence right now that every activity that happened in December was correct. And if we don't, we need to be on the phone because actually we're getting ready to run out of time if it's Chase. If you got Chase, you better hurry up because Chase is not playing that. Okay. What else here? I've got a list of things here I want to talk about. All right. So the last thing I want to talk about is this beneficial ownership report. I had a lot of people on like New Year's Day texting me about this. So this is what I found out, y'all. A lot of people, vendors, and I'm not going to call any names, but vendors that do filings and things like that. Again, the labor is where they was hired. Listen, if you don't want to do it, I'm going to charge you a fee to do it. And I think that they have every right to do that. What I don't like is the fact that they highlight the penalty and the jail time, and then they say, to keep from going to jail, pay me $99 to file this for you. I filed this for myself. And I'm not exaggerating, I'm not oversimplifying it. It literally took me not even 5 minutes to get it done. So, what is this? What is this beneficial ownership report? Okay, so I am going to www.fincen.gov. Okay, fincen.gov, fincen.gov. And we're looking at the frequently asked questions. I'm only going to read like the major ones. What is the beneficial ownership information? Beneficial ownership information refers to identifying information about the individuals who directly or indirectly own or control a company. Basically, when you look at the form, it's the owner's name, first and last name, and your address and the business's name. That's it. All right. So then for me, as somebody who is very skeptical, now this is the same government that had these rules dormant for so long, and then all of a sudden you want to start charging me interest. I've been doing extensions for years. That in fact I do this for the person that's saying that. I do this. This is, they don't know that March 15th is the deadline to do their business. They think it's September the 15th because they do this. They extend every year. So this is the same body that will sneak and invoke a dormant law like that on us out of nowhere. And they're saying, oh, we want to know some more information about your business. They're working on something. They're working on something. So then why? Why do I have to do this reporting? Okay, so it's telling me in 2021, Congress passed the Corporate Transparency Act on a bipartisan basis. This law creates a new beneficial ownership information reporting requirement as part of the U.S. government's efforts to make it harder for bad actors to hide or benefit from their ill gotten gains through shell companies or other opaque ownership structures. That's why they did it. They did it so people can't hide behind an LLC. They want to know who's the man behind the business? Who's the woman behind it? Who's the puppeteer of this structure? Oh, really? That's a lie. And you know how I know that's a lie? Now, look, this is their public statement, and it sounds very noble. This is how they get the public to give up their power. This is how they get the public to look in the other way. I know you ain't just tell me that in 2021 Congress passed this crap when the sitting president has millions of dollars going through all kinds of LLCs that he has given to key family members who are the people behind these LLCs. Oh, so you want to keep bad actors from doing this? Did you tell the president that? Do Biden know that you got until 2025 to get this written up? I'm not going to get too political, I promise. But come on. Both sides of the aisle have to come to some kind of an agreement and call BS when BS is reeking. All right, so that's why. So then the next question is the next question. Now listen, okay, let me say this. Just because this process is BS does not mean you shouldn't do it. Okay? Cuz when I was catching up on my reading, I did come across a certain penalty if you don't comply. Now this is just for people who just willfully don't want to comply. I don't think that's most people that's going to be listening to this unless you have an army. Like, we're just not ready for that kind of fight. Do y'all know what they up to? Let me go to the page that tells me what happens if you don't pay. Okay, what happens if you don't pay? What penalties do individuals face for violating BOI reporting requirements? Okay, here we go. As specified in the Corporate Transparency Act, a person who willfully violates the BOI reporting requirements may be subject to civil penalties of up to $500 for each day that the violation continues. The person may also be subject to criminal penalties of up to 2 years imprisonment. I got to go to jail for not telling you the name, the first and last name of my LLC and the address. I got to go to jail because I ain't do that. Jesus. And a fine of up to $10,000. I ain't even gonna read no more. That's the gist of it. So it's true. Like my phone and my email was going off, and I'm like, what is y'all going off about? And I looked into it, and sadly, yes, y'all, this is what's going on. If they're not trying to push us into a police state, I don't know what is. We have to just come together and understand when America is starting to dilute and fizzle out, and it starts with our liberties, our freedoms. That was the whole point of why you got a corporation, was so that it can be a separate legal entity. Now you're trying to tether me. That's what I think that they're trying to do. At some point in the future, they're trying to make me and my corporation one. I will make a picket fence, something, and be out there with a bullhorn on that day. Stop playing. So that's what they are up to. This is one thing I want you to be aware of. Sit down. We got until next January. So we have just a little under a year, right? We got at least 11 months and a few days to get this together. And I will do a webinar to show you how to do this. You don't have to go through the fear mongering, like I promise you. I will do one of my other LLCs and show you how to do this. You don't have to pay nobody to do this. Hold your accountant accountable. If that's you, hold yourself accountable. Like this can be part of that 2 hours we talked about. Okay, what do you really want from your business? What do you really want from your personal finances? Like, okay, you don't have to be a millionaire. I'm telling you what the millionaire mindset does. For me, a millionaire mindset just means someone who respects money. Money has the nickname currency because current holds charge. And we got to watch where we put our charge. We got to watch what we ignite. We got to watch what we sow into, what we connect to with our current, what flows out of us and where it goes. So yeah, that can be part of those 2 hours, and you will stand taller in your business when you start taking a more active role, especially on Mickey Mouse stuff like this. It's important. It's Mickey Mouse because it's first, last name, address, and some other little small stuff that literally took me no more than 5 minutes to fill out. Stuff like that, I think you should take the reins on. Not only that, we talking about jail time. Do you really want to leave this up to somebody else? And if you do hire somebody else to do it, make sure you got your receipt and all of that, because this ain't just going to be no penalty. Now I do want y'all to know they do have an initiative where if you're late filing, or if you need to correct some information on the return, and you say, oh shoot, I wasn't paying attention, I need to correct it. They will give you 90 days to make the correction. They've got, on their website that I mentioned, you can go in there and get tutorials on how to do that. But I want to put this little tidbit in there. Watch all of this guidance that the government gives you. Okay? The IRS, if you write a check and don't receive a check, the IRS is your opponent. I know for many of us, our relationship with IRS started with the IRS being provider because we were getting refunds. And that's still kind of what we hold dear in our heart. But no, if you're writing checks now to IRS, they are your opponent. So any advice that they give, it's not advice. It's not. That's just like the Ravens during halftime game going to the coach with the Dallas Cowboys asking for what their next play should be. What do you think we should do? What do you think we should put out there? They're going to tell you, or they're going to answer that question to their advantage. As long as you remember they're your opponent, you'll start thinking a little differently when it comes to your interaction with them. Even when you're on the phone, watch all this stuff they want to start giving you. Okay? So that's pretty much what I wanted to share today. I do want you to follow me on Instagram. That's the only social media presence I have for this particular topic at the moment. And it's on Instagram at Micah the Prophet. That's where I'm going to announce when the webinar is going to be so that I can have you watch me do this BOI report. Okay. Oh, just before we close, the there are exemptions. Okay, there are companies that will be exempt from this. There are about 23 companies that will receive an exemption. But if you're a small business, if you have an LLC, a C corp, an S corp, a partnership, this applies to you. Thank you so much for joining me, and I hope you will join me again next week for another interesting talk on igniting your income.